Regarding the 50C, let's discuss. Interesting question. Ms.Mohini transferred a house to her friend Ragini for 40 lakhs. The sub-registrar valued the property at 48 lakhs. The Mohini contested the valuation against this and it was referred on appeal and final value determined at 41 lakhs. Accepting the said value, the differential stamp duty has been paid. The total income of Mohini has been given, which is before considering this 2,80,000, 3,45,000. Mohini had purchased this house in 2016 and the registration expenses has been incurred. You are required to explain the provisions of the Tax Act. Friends, the actual sale consideration 40 lakhs. Sub-registrar value is 48 lakhs. Assessee went on appeal and final value determined at 41 lakhs. Now, whether in this case section 50C is applicable, we have to see the final value. This is irrelevant here. The final value and this we have to compare. The 110% of this value until that time it will be ignored. So 110% of that value is nothing but 44 lakhs. What is the value determined finally in the appeal? 41 lakhs. Therefore, by operation of section 50C, the full value of consideration will become 40 lakh, not 41 lakh, because the difference between this and that is the 10% threshold is not there. Therefore, full value of consideration in this case is 40 lakhs only. Who is the assessee? Mohini and Ragini. Two people. She is a seller and buyer. Mohini, in the hands of Mohini, there will be, whether it is a long-term capital asset or short-term capital asset, the answer is, if the sale happened in 23-24 and whereas the property had been purchased in 2016-17. Sorry, 2016-17. So therefore, more than the threshold, therefore this is a long-term capital asset. So 40 lakh will be treated as the sale value of consideration, full value of consideration, sale consideration, less cost you can compute it along with the expenses incurred for transfer, use the index, arrive at the long-term capital gain in the hands of Mohini. Plus, there is another income also given in the hands that also will be taxable. So, the total taxable income will be considered. Coming back to Ragini. In case of Ragini, the one point you have to discuss, she is the buyer. Whether section 56 will be applicable or not. So what is this 56? It's a gift section which is given under the income from other sources. What is the difference in the sale consideration? 40 lakhs and the difference in final sale consideration is 41 lakh. It is not more than 110%. Therefore, section 56 is not applicable in the hands of Ragini. Therefore, there is no gift taxability which is there in the hands of Ragini. That is why in the examiner trickily asked, intelligently asked to discuss the taxability of in the hands of Ragini, so that you should write about 56 as well. Friends, problem starts with 40C. Went to the long-term capital gain computation. It is pretty simple, straightforward. And in the hands of Ragini, you have to discuss about section 56. Thank you.